How's it going today? We're doing another vertical live because the show is a sellout show. We sell out in all the wrong ways. We've become a puppet of this show has become a puppet of YouTube. Unfortunately, we have sadly been abiding by YouTube's rules, even though I fucking hate it. This is going to be a very short episode, by the way. This is not going to be a long one. This is going to be about investment portfolios. We're keeping it simple. We're keeping it short. Now, you're probably thinking, well, what are you talking about investment portfolios? Well, we're talking about different forms of asset allocation. Which is better? Which is worse? I'm actually going to go from my favorite, so you guys get the favorite out of the way, and then you can end this video if you really want to my least, well, I wouldn't say least favorite, but the most effective to the least effective. It's kind of tough to rank them because they're actually pretty decent. Wouldn't say all of them are the best, but it just depends. Now, I will say this before I go over the list. Always talk to a financial advisor. Always speak with a financial advisor. Always the best thing to do. So we're going to talk about the first, one of my favorites. Now, I'm going to tell you this. I do not believe in any way, really, in really paying attention to my portfolio weighting. I don't really pay attention to it at all. If we're going to be honest, I barely pay attention to my portfolio weighting. But if you guys care about how much your portfolio weighs based on certain assets, this is a good video for you. I personally don't give two shits how my portfolio is weighted as long as I'm exposed to things that are valuable. Assets that are valuable, that will appreciate over time, and that are fairly inflation-proof, like real estate and stocks. Anyway, mainly because I believe the dollar is worthless. Anyway. So we're going to start off with the all-weather portfolio by none other than Ray Dalio. Michael Donaldson says, crack, it's in high demand. My man, dude, my man. Well, hey, if we're talking about my butt crack, hopefully that's not in high demand because people are screwed up if it's in high demand. But anyway. All-weather portfolio by Ray Dalio is my number one. And so you're probably wondering, why is it better? Well, it's designed to perform in any economic condition. Now, the cool thing about it is it balances a few things, actually. There's growth, balances inflation and deflation. So it kind of like protects you against all the different things that can happen during economic cycles. Now, here is the allocation. This is the meat and potatoes here. The allocation for the all-weather portfolio, and really listen to me here, is 30% stocks. I got it in front of me here. Jack's Cab Confession says, what's up, Garza? And Michael Donaldson says, gold. All right, so allocation for the all-weather portfolio is 30% stocks, 40% long-term bonds, 15% intermediate term bonds, 7.5% of it is gold, all right? And then 7.5% is commodities. I'm going to do that again. I'm going to repeat it back. So the allocation for the all-weather portfolio, I think this is a very good portfolio, by the way. The allocation is 30% of its stocks, 40% is long-term bonds, 15% is intermediate term bonds, 7.5% of it is gold, and 7.5% of it is commodities. Now, the pros to this is it's very, very diversified. You are spreading out your risk a lot by having a portfolio that is weighted in this way. And there's also low volatility. So if you're somebody who cannot stand the ups and downs of their portfolio, this is actually a good portfolio for you, to be quite honest. So I will say the cons are that it underperforms during strong bull markets. That is one thing. So it may not outperform the S&P 500. It also may not outperform. Now, this is during bull runs, though. In the long term, it could be argued that the all-weather portfolio would actually destroy the S&P 500 in the very, very long term, depending on how long out you're looking. Now, number two. This one is the 3-fund portfolio. Now, Let me read some of the comments before we go into the three fund portfolio real quick. Let's take a look at the comments. Tim Smith says, I just went heavy on Canadian oil and gas. Kevin O'Leary just committed to building a giant AI data center here. Whoa, really? That will be powered by natural gas. Okay. That's pretty fucking cool. You serious? It's pimp. All right. That is pretty cool, though. The whole thing will be powered by natural gas. An entire data center powered by that's wild. I'm going to look into that for sure. Dude, Tim Smith, man, you're smart, man. Get it, brother. Especially if there's going to be data centers powered by natural gas. I'm an idiot by not piling in my money into those companies. Tim Smith also says, yeah, it's being built in northern Alberta. He did that after the leader of Alberta said they have 300 years of natural gas here. Hell yeah. That's a lot of damn natural gas. Honestly, I believe in a combination of energy. I believe in natural gas, solar, wind I'm a little questionable about the more I look into it. But solar, I'm definitely all for it. I believe using setting up buoys in the ocean, using the tidal forces as a form of energy, because there's a lot of energy that comes from the tidal forces that can be utilized by having buoys lined across the shore in certain areas. But Tim Smith also says the Canadian oil and gas ETF I bought is leveraged and covered call over 17% yield. Damn, dude. It's a fucking high yield. Get it, man. Potosaurus Man 420 says, are you a ghost hunter on the side? I'm a ghost on the side. I look like a ghost hunter, though, because I'm fucking pale. Also, I live in an area that doesn't get a lot of sun during the fall and winter time, so... I mean, it's funny. I'm actually kind of, like, tannish during the summer, spring times, but during these winter, fall times, I become a ghost. I could get a little more sun, though. When the sun is out, though, I do try to get out as much as possible, for sure. Just get that nice... let's see here. Hell yeah, lol, I was just curious. You look tired as hell, says Michael Donaldson. Yeah, I'm a little tired. My eyes are less baggy than usual. I'm tired, though, for sure. Dude, honestly, Christmas time and holiday times in general in the call center industry are very busy times. So I've been very, very busy at work. I was debating whether I had the energy to want to do this, but then I thought, well, if I'm talking about investing, which I'm very passionate about, I usually can find the energy. So yes. Tim Smith says Garza is considered black in Oregon. No. Oh, that's funny, though. The only person who thinks I'm black is me. Hashtag no justice, no peace is what Tim Smith says. Jack's Cab Confession says, what's your favorite genre of books if you read? Pornography. Porno magazines. That's my favorite genre of books. No, honestly, I read for information, though, straight up. So if you want to know my favorite books, my favorite genre of books, I would say informational, to be honest. Just informational books, whether it's learning, like, I'll give you an example, like books that teach you how to, like, program, for instance, programming language books that teach you about electronics. Textbooks really are my favorite genre of books, I guess you could say. Just any book that teaches me something that I don't know or allows me to explore an industry of something I don't know. Or I do like biographies a little bit. Those are pretty fun. Tim Smith says, what is going on with LeBron James? He's stepping away from the team. Sounds like there are allegations from him being at Diddy parties. So the rumor has it is he's probably going to get traded. He's been playing like crap, like absolute dog shit. So that's possible. Poto says, those Diddy parties, man. Ain't no party like a Diddy party, Tim Smith. You know that. We've been there together. Have we? We've been to the Diddy parties? Poto says, bro, I feel that I got insomnia. No fun. I'm like tears but here but awake. I'm like tired but awake. I had that feeling earlier, by the way. It's a weird feeling. Information on good porn books, lol. JK. No, but I do like reading books for information. I do a little bit of pleasure reading, but I don't really read a lot of fiction books. Now, when it comes to television shows, I love science fiction, for instance, like Star Trek. Star Trek's my favorite just because it's so good. Star Trek is so fucking good. But Star Trek's my favorite TV show, any of the series really, except for Woke Trek. Woke Trek Discovery's not my favorite. What else was I gonna say? Look at these nuts, dude, my boy! Oh, LeBron has been diddied out, dude. I know. My boy Bron, dude. So sad, so sad. All right. I've been reading far too many of these comments. Let's got to get back to these portfolios here. Poto says, though, pleasure. My man. All right. So the 3-fund portfolio. Now, why is the 3-fund portfolio better? All right, let's take a look here. Well, simplicity with global diversification. Now, the 3-fund portfolio consists of these three funds. The first fund is going to be the total U.S. stock market, and that is VTI is the ticker symbol. It's the Vanguard total stock market, basically for the U.S. The allocation is about 40 to 60% in most situations. So 40 to 60% of the portfolio is allocated to the total U.S. stock market. And then 20 to 30% of the portfolio is allocated to the total international stock market. That is the VXUS, which is basically international stocks. Now, you could actually have a 2-fund portfolio. You don't need the VTI or the VXUS. You could actually just get the VT in place of those. But in this example, we're using a 3-fund portfolio, so we're following that route. So it's 20 to 30% of your portfolio is the total international stock market, VXUS. Honestly, you could do VTI and VXUS combined together, or you could get the VT instead, which is 60% the total U.S. stock market, 40% total international. So this depends on your preference. But yes, and then 20 to 40% of the allocation is to the total bond market, and that's BND. Once again, that's the total bond market, BND. So just a quick repeat. 40 to 60% total U.S. stock market, VTI. And by the way, that's an example. There are other ETFs out there besides the VTI that expose you pretty much to the entire freaking thing. All right. So, but these are good examples. And then there's, like I said, 20. So let's just go from the beginning. 40 to 60% total U.S. stock market. VTI is the ticker symbol for that one. 20 to 30% total international stock market. VXUS is a great example of that. And 20 to 40% of the allocation can be in total bond market, and that's BND. You could fluctuate the weighting however you want. To be honest, it's totally up to you. But that's how the 3-fund portfolio works. The pros to that are basically it's easy to build and manage around. Pretty easy to build and manage. Very simple, very clean cut. Nothing too crazy with it. You also get global exposure. You get exposure globally to international markets. I think the one thing that the 3-fund portfolio is missing is actually the international bond market. I do think that you should actually be 50-50 between the total bond market, which BND, by the way, last time I checked, only does the U.S. bond market. I could be wrong on that, by the way. So you might want to fact check me on that. But there's also, if I remember right, there's also an international bond market ETF out there. So keep that in mind. The cons are that it lacks alternatives like real estate or commodities. So that is something to keep in mind. You could actually get real estate through the VNQ. What? Not VNQ. Was it the VNQ? Yeah, VN. It's like the Vanguard Total Real Estate ETF, and it's a really good one. So, in a weird way, you could fix that portfolio if you wanted to. If you wanted to add a little bit to it, you could add ETFs that expose you to different things. But the 3-fund portfolio is a very basic one, especially if you don't want any complexity. And if you just intend to continue to buy, and never sell, I really do believe in buying and holding and never selling. That's really my firm belief when it comes down to investing. I will admit I'm more of a dividend investor for sure. A lot of my portfolio consists of very high quality companies that have really good cash flows, are really well managed, that consistently or treat the shareholders right. It's really what I look for. They treat the shareholders right. This perfect company, good structure, good systems. A company with good systems in place that keep the company afloat are great. Also, just good brand. Just companies with good brand. All right, so the next one is I'm going to try to speed this up a little bit, but not too much, though. Not too much. I do want to give you guys a bit of an education here. There are tons of different portfolios. It's up to you to choose whichever one you want, or talk to a financial advisor and figure out what they think. It's up to you, though. It's always up to you. I'm never responsible for your fate. You got to figure it out. But you can always get education. Like my channel. I love doing live videos like this because it allows me to just kind of speak off the cuff a little bit, talk to my viewers. Poto says, pleasure reading, you say. All right, let's see. So this third one is the Golden Butterfly Portfolio, right? So you're wondering what's so great about it? Well, it balances growth and it balances stability. It's suitable for moderate risk investors. Growth and stability is a good thing. I think if you can, because you don't have to have a super risky portfolio to have long-term growth. You just need to have a good one. I think diversification is the key, but here is the allocation for the Golden Butterfly Portfolio. Now, 20% total U.S. stock market, right? 20% small cap value stocks, 20% long-term bonds, 20% short-term bonds, 20% gold. I'm going to repeat that allocation one more time, just so you guys can hear me. Make sure you guys listen. Unclog your ears, because I've been putting my penis in your ears. All right. Now, the allocation goes like this. 20% total U.S. stock market. 20% small cap value stocks. 20% long-term bonds. 20% short-term bonds. 20% gold. Now, what are the pros behind this? Oh, shit. Hold on. I'll read the comment here in a second, but here we go. The pros of this Golden Butterfly Portfolio is resilient during downturns. Which is kind of nice, by the way. You want a growth portfolio, especially during downturns, especially if the companies within it are good. And, as long as you're constantly dollar cost averaging into your portfolio, pretty much good for the long term, especially if you're super diversified across asset classes too. It's has strong historical returns with low volatility. That's pretty nice. And look, a lot of investors don't like volatility. I'm a weirdo. I kind of do like volatility. I love the ups and downs. But because I do have such a diversified portfolio, I really don't see a lot of downturns in my portfolio, thank goodness. I mean, there are some slight dips, but nothing too crazy. And then the cons are that it's pretty complex to rebalance the portfolio because small cap stocks, they grow so quickly a lot of the time, depending. Not all the time. So it depends. Anyway, so small cap stocks definitely have the largest growth potential. And so when there's a downturn in small cap stocks and you start buying more small caps, then when they do go back up, they grow very rapidly. So small cap is definitely up and down for sure. It's a volatile. It is a little bit volatile, but it's tough to rebalance that. Like I said, I don't really give two shits about portfolio weighting. I'm not that kind of guy. I'm not that kind of boy. Not that kind of boy. All right. Anyway, hey guys, make sure you guys like the video and subscribe to the channel. We need more simps. Okay, we need more simps who want to be pimps. All right. So if you want to be a simp and you want to be a pimp, you got to subscribe to this channel. How else are you going to be a total simp and a total pimp? Can you be both? I think you can. I believe in a world without limits. Anyway, all right, so let's take a look at the comments real quick. My boy Tim Smith. Says breaking. Garza preemptively pardoned by Joe Biden. Whoa. That I did not know. That's what Tim Smith just said. Did I got pardoned by... Did I? You know what? I was wrong about you, Joe. You really are a good guy. Oh, Joe Biden. I'm sorry I voted for Donald Trump, Joe. You were on my side this whole time. I'm sorry that Kamala totally betrayed you. I'm sorry that Nasty Pelosi totally betrayed you. I'm sorry your whole party betrayed you, but you didn't betray me, Joe Biden. You pardoned me. I don't know what crime I did just yet, but I'm trying to figure that out. But if what Tim Smith is saying is true, thank you, Joe. From the bottom of my empty heart. Thank you, bud. Biden 2028. No. Let's take a look here. All right. So, yeah, that's the golden butterfly portfolio. And thank you, Tim Smith. That was a hell of a comment. I appreciate that. All right. Now, number 4. What? How fast do you think you can do that one? How fast? 1, 2. All right. Let's... Hold on, one more time. Oh, all right, I guess. All right. I'm ruining my hands. Anyway, number 4, the 90-10 portfolio. Warren Buffett. All right. So why is it so great? Why is the 90-10 portfolio so sexy? Right? Well, it's optimized for long-term growth and simplicity. The simpler, the better a lot of the time. So, its allocation goes something like this. 90% of it consists of the S&P 500 or the total stock market, your choice. Me personally, if I'm going to go this route, if I'm going to be 90% in stocks, I think I'm going to be 90% the total stock market. Granted, I might even be 90% the entire world stock market. Now, that you could do that with VT, Vanguard Total World Index. And the VT consists of 60% of the total U.S. market and 40% of the total international market, basically. Not the total, but, roughly the total. But if you don't mind having just exposure to just the U.S. stock market, then the total stock market for the U.S. would be enough. And then if you're really feeling ballsy, S&P 500. Look, the reason I wouldn't want to go 90% of my portfolio into the S&P 500 is that while there are great companies in there, it just isn't the level of diversification that I would feel comfortable with. And 500 companies is really good, by the way. So, I mean, honestly, even if you did go with the S&P 500 route, I wouldn't argue with you there. At least you're diversified. Maybe not the level that I would want to be, but you're diversified, so that's good enough for me. And then 10% of the allocation goes to short-term treasury bonds or cash. Now, this is fascinating. What it is saying is that you could do, instead of the treasury bonds, 10% of your portfolio could just straight up be cash. Now, why would 10% of the portfolio be cash, you're probably wondering. Well, sometimes cash can be leverage, especially during a bear market. If the S&P 500 were to crash, or even the entire market for the most part crashed, any spare cash that you have could be used as leverage because you could buy all of these great companies on the dip. So there's an advantage. You can buy great ETFs on the dips. That's huge, in fact. That's very huge. So once again, that portfolio goes like this. 90% of it is either the S&P 500, or if you don't want the S&P 500, you could go with like the total stock market for the US. Or if you want to go even crazier, you could do the total world stock market, which would just be the VT, the Vanguard Total World Index, which I think is actually pretty good. I'd probably go that route, but that's not everybody, it's not everybody's cup of tea. And then 10% short-term treasury bonds, or just straight up 10% straight up pure cold hard cash, which isn't bad. What are the pros of this, though? So the pros are it maximizes stock market exposure for young and aggressive investors. So if you're like 20 years old, by the way, if you're like 30, even 40, hell, even 50 in my opinion. Well, 50's cutting it maybe, but if you're like even my age, 40, 20, having a very stock-heavy portfolio is totally fine, especially if you're diversified. I still think it's good to be exposed to other things than just the stocks, because it's good to be exposed to companies and all that shit, but like at the same time, I think you should be exposed to bonds and gold and all that shit. Like you should be exposed to other assets. I think it's just a smart thing to do. That's just me though. The 90-10 portfolio, that is Warren Buffett's portfolio style. And who can argue with the king? And then let's see. And then and then the other pro is that there's minimal management, so you don't really have to manage it that much. There's really nothing to manage. And then also the cons. Here are the cons to it. High volatility. High volatility sucks. But there's not... Look, it sucks for most investors because people hate seeing the violent upswings and downswings and stuff. I don't mind it, but you might. But if you're young, just dollar cost average, you'll be fine. It's unsuitable for risk-averse or retirees. So if you're too old, there is a point where you're too old to have a portfolio like this. I really believe that. I don't even mean that to be a dick to any of my older viewers, but that's just, sometimes you got to go the bond route, bonds or something. But then again, bonds aren't really inflation proof, so it's like you might as well go with dividend stocks. I don't know. It's a tough call. I just don't trust cash at all, and I don't trust any asset that isn't really inflation proof. So bonds are tough for me to pile into at any age. But I still have bonds. I still expose myself to bonds, and I think it's a smart thing to do. Anyway, before we continue any further, there's two more portfolios that I want to go over. This is fun. This is the type of video that I've been wanting to do. As much as I love talking politics, I wanted Trump to win. Trump won. He won by a landslide. And, thank you, Donald Trump. Anyway, Tim Smith is saying, I watched Copper Cab's stream. I'm dreaming of a diverse Christmas. Dude, Copper Cab's DEI Christmas episode, dude. Fuck yeah. Copper Cab is the funniest fake woke person of all time. Like, he plays the role so perfectly. Like, the one thing I love about Copper Cab is he is the greatest troll of all time. He is so good at pretending to be a social justice warrior that it sometimes I believe it. He's that good of an actor. So Copper Cab is such a good actor that he has convinced moi that he is some sort of SJW, right? And I fucking love it. So Copper Cab is the man. I love Copper Cab. Um, all right, so this one is called number 5, lazy portfolios. It's a lazy portfolio. It doesn't do anything. It's boring. Examples would be like Paul Merriman's Ultimate Buy and Hold. So here's why it's better. Oh, sorry, I'm a little tired though. You get diversification across asset classes and geographies, right? So here is an example of the allocation, right? 10% large cap stocks. 10% large cap US stocks. 10% small cap US stocks. 10% value stocks, which is like large and small. 10% international stocks. So you can get like ETFs that expose you to like international companies, that sort of thing. You could, by the way, you could do all of these portfolios with specific ETFs to allow this portfolio dream to come to life. That's why I do love a lot of the ETFs out there, because those ETFs gives you the ability to pretty much do exactly what you want to do, allocate the way you want to. It's really handy. And then we got 10% REITs, real estate investment trusts, which REITs are unbelievable. REITs are great because the reason REITs suck my teats is because you're getting exposure to real estate, and real estate exposure is a good thing in my opinion. The more real estate exposure you get, the better. And then 50% bonds. Now, I am not a fan of exposing myself to bonds at that level. I think 50% is too much. I think 30%'s 20 to 30%, I think, is the right amount of exposure to bonds. Now, bonds can be a great source of income during really rough times in the stock market. So if you're always buying stocks, having a bond portfolio can help give you the money that you need to purchase more stocks during a bear market. Because I'm always looking to buy during bear markets. Now, I know bear markets don't always come about, so I just buy whenever I can, to be honest. But when a bear market happens, I've got cash reserves sitting right on standby when I need them. And then the pros. So here, let me do a recap of the allocation for this one. So the allocation is 10% large cap U.S. stocks, 10% small cap U.S. stocks, 10% value stocks, large and small, 10% international stocks, 10% REITs, which stands for real estate investment trusts, and then 50% bonds. Now here are the pros. You have a high potential for risk-adjusted returns, right? That's great. Which essentially means, like, you basically are going to get good returns, and they're not exactly going to be, like, too risky for those good returns. At least that's my interpretation of it. It covers all the major asset classes, which is nice. You want to make sure that you're exposed to different asset classes at least. And then the cons, you could say that the cons would be like, it's a little complex, it's a little complex, and it's pretty expensive to implement sometimes. And the reason it's expensive to implement is some of the ETFs I believe that you would need have a little bit of higher expense ratios, but honestly, you could still, it's not like the most expensive thing in the world. I think it's good, man. You could get 10% of your portfolio, for instance, for REITs, could be like the VNQ, which is like the Vanguard Total, what the fuck's that damn thing called? It's a Total Real Estate, not Total Real Estate, but the Vanguard Real Estate ETF. And then you can get like a bond ETF to do 50% of the bonds. You can get the VX US or whatever to do 10% international stocks. Anyway, whatever. Basically, you can get ETFs to do that. It's a little more. I don't know. I don't really overthink my portfolio that much. I just invest what I can into ETFs that have really good asset allocation, and call it good. But let's see here. All right, so well, I don't plan on doing this for too long tonight. I'm a little tired, but let's take a look at the comments before we go over the last portfolio last portfolio theory we're gonna go over for allegations. My eyes are so tired. Tim Smith says, portfolios are greater than porta potties. You know what's even better, though? Is working on your portfolio on your phone while you're taking a shit in a porta potty. That's some top-level thinking, Tim. Top-level thinking. And while you're taking a shit, your portfolio is taking a shit. Okay, anyway. My sense of humor is still off right now. But let's see here. So, at number 6, we have the risk parity portfolio. Now, I don't mean parity like I'm making a parody like Parody. I'm talking about parity as in Parity. Now, you're probably wondering, why is this so sexy? What's so sexy about it? So what it does, it allocates a risk equally rather than capital, which improves the diversification, right? So what it does, and let me try to explain this in a way that makes a little more sense. So it's trying to weight the portfolio by risk more than by how much capital is being put into it, I guess. It's a tough one to explain. I'm not very good at explaining this particular one. But anyway, the allocation would go something like this. There'd be a weighted mix of stocks, bonds, and commodities based on volatility alone. I'm not a fan of this one, to be honest. I don't really like this one that much. This one's not my favorite. It's basically, though, it is tailored to minimize drawdowns. The cons are that it requires leverage and complex analysis. This is why I hate this, because I'm not a fan of having to constantly analyze the complexities of the portfolio. Really, all one needs to know is that you need to be spread across different asset types, asset classes, I should say. And once you're spread out across all sorts of different asset classes, you'll be a better man or a better woman. I'll be a better woman, 'cause I can be a better woman. Hold on. Oh, pop my neck. It's been a long day. It's been a long road. Yeah, so it's like I said, since there's a lot of complexities to it, there's really no one true way to allocate that. And like I said, I'm not the best at explaining it, but I think anything that requires too much complex analysis, I think probably isn't really worth it unless you have a real strategy that gives you an edge. If you have a strategy that gives you an edge and constantly allows you to profit in the markets, even if it's swing trading or day trading or whatever, hey, go for it, man. I don't know what those would be, but all I know is I'm a diversified investor who invests for the long term. I don't really sell. I take the dividends that come into me. 15% of my portfolio is swing traded, which means I have 15% of my portfolio consists of the BITI, the BITI, and which allows me to bet against Bitcoin. And ever since Bitcoin's been going up on this bull run, I've been buying one share of the BITI as the BITI continues to go down in price, which is perfect for me because when Bitcoin crashes, I'm able to make some sweet little profits here and there that'll allow me to fund my portfolio even further. So having 15% of your portfolio swing tradable, I think is a good thing. I think it's smart. I love swing trading. It's so much fun. Let's see. Tim Smith says 50% of bonds were played by Sean Connery. I'm Bond, James Bond. I'm James Bond. You're the man now, dog. Rest in peace, Sean Connery. Love you, bud. Sean Connery's awesome, man. It's the hunt for Red October. Oh, Red Beard. I'm just gonna talk like Sean Connery the entire time. Get away from me, laddie. And you smell like a goat. Your mother's a whore and you smell like a goat. Ah, it's Trebek. Tim Smith says, I have 69 shares in Tug. It's a Sunbelt-based massage parlor REIT. Please tell me that really exists, by the way. Dude, you know what? Call me an idiot, but I'm looking up Tug stock. Okay, so Google put up STF Tactical Growth ETF. We might have just found the golden ETF by accident, by the way. And then Redbeard says, lol. I just want to let you know, Tim Smith, I'm really tired of your massage part. I'm tired of your inappropriate jokes. I sound like Richard Nixon now. See, the problem with my accents is I can't keep a consistent one very well. Like, I'll try to do one, like Robert Downey Jr. Robert Downey Jr. always talks like this a little bit, but even that just fades away. So I can't even keep a fucking consistent accent. When I at least try, I gotta stop overthinking. I think I overthink the accent, so then I fuck it up. No, you smell like a goat. I'm drawing pictures of whole sticks all day. No, but no, yeah, I wouldn't say I'm a very good impressionist. But I will admit that Nick Cage is definitely one of my favorites, just because of the way he speaks and the way he's kind of arrogant and a little insane, and is definitely bad at. Nick Cage is definitely bad at managing money. There's Warren Buffett, who is the greatest manager of money of all time in assets, and then there's Nick Cage, who buys fucking T-Rex sculptures. Hell yeah. Anyway, that's a terrible Nick Cage impression, but I will say this though: out of those 6 portfolios that I went over, which of those attracted you the most? What was the most attractive portfolio out of those? I personally prefer Ray Dalio's all-weather portfolio. I think it's perfect. I think it is the perfect portfolio. I think personally it's a little too low on stocks. That's the only thing that sucks about it. He's a little too heavy on bonds. He does have gold in there and he does have commodities. That is smart. That 7.5% allocation for each does put a good 15% chunk of the portfolio into things that are outside of most normal assets, which is nice. So in a lot of ways, it does protect you against negative volatility, and it does have long-term growth. Portfolio, I think, is the safest, yet good growth potential out of all of them. Me personally, it's tough because I actually like the 90-10 portfolio out of all these, because one, I believe in inflation proofing your portfolio. So I call it inflation insulation. And the best way to insulate your portfolio from the terrible inflation that exists is to honestly have 90% of it in my opinion, just stocks. Personally, I think the Vanguard Total World Index is actually the best ETF you can have, and that's the VT, because 60% of it's the total U.S. markets, and then 40% of it is the majority of international stocks that you can get as well. It's perfect. I think it's the perfect ETF in my mind. It's smart. At least that's the way I look at it. So yeah, definitely managing my portfolio. I don't really manage that much. I just buy and I hold. There's nothing complex about the way I do business when it comes to investing. I look for individual stocks that I think are good. I try to pile up on certain companies that I feel are not just feel but know are good. Um, I love real estate investment trusts. They are happen to be one of my favorite uh, sectors in the stock market for sure. Um, let's see. Oh, Tim Smith had a message, but he just retracted it. What the hell? But yeah. Anyway, like I said, you guys, I'm a little tired, so I may have to cut this stream a little bit short. I am gonna drink a little bit of Coors Light. Let's get some Coors Light here. I should probably drink some water though. A little water before bed, I think, is always a good thing. Ah, love this piss water. Coors Light, when are you going to sponsor my show? The ball's in your goddamn court, all right? Coors Light, it doesn't love me anymore. Why doesn't Coors Light love me anymore? Is my butthole not tight enough? Is my butthole not right enough? What have I done? My portfolio is a dirty hole. I don't know where to go, how to look, read a book. It's reading Rainbow. I don't know. Because I just want to tell you something now. But anyway, trying to think of anything else I want to say. Oh, by the way, Breathe Right strips are fucking tight. By the way, Breathe Right, I'm trying to get a sponsorship from Breathe Right, but I don't know if that's ever going to work. I don't know if they're what... they're going to like it or not, though. I'm going to make them sponsor me one way or another. So Breathe Right, the ball is in your... So Coors Light and Breathe Right. Ball is in your court, by the way. Ball is in your fucking court. All right, you guys. Any last messages, last words? Anything you guys want to say before I sign off for the night? Anything you guys want the crowd to know? Anything sexy? Anything spectacular? I will say this while I'm waiting for somebody to message on here, just in case. At least on the chat. I just want to say thank you guys again. I mean it from the bottom of my heart. I say this a lot, but I am thankful. I don't know why you guys watch me sometimes. I don't know if there's a lot of people who hate watch me or love watch me. But whether it's hate or love, I'm just excited, honestly, that people watch the show. That makes me happy. It doesn't have to be a lot of people. I prefer a lot of people, though. I prefer millions and millions of people to watch the show because the more people I could reach, the more people I can help. And ultimately, that was always the goal of me doing this show, and I felt like I lost track of that a little bit. So I wanted to do an episode like this, where it's me doing an hour of really good quality content where I talk and teach, talking about portfolio weighting and all that. Well, I should say portfolio allocation. Even though I don't really believe in weighting my portfolio in any specific way, I just believe in exposing myself to as many different asset classes as I possibly can in existence. Um, Tim Smith is saying, I'm starting to craft my portfolio at this point. How much do I want in index funds, commodities, ETFs, etc.? So this was helpful. Yeah, and honestly, man, this kind of gives you, it gives you kind of, oh, what's the word? It gives you an idea of what's most attractive to you, and every investor is different in the way they think about their portfolio. The way that I construct my portfolio, for instance, is vastly different than the way that Tim may construct his. For instance, I'm more attracted to like a 90-10 portfolio, whereas maybe Tim might be more attracted to the golden butterfly portfolio or the three fund portfolio or even the all weather portfolio. I think the only thing I hate about the all weather portfolio is it's a little too bond heavy for me, but I mean, I guess I could say that I kind of emulate the all weather portfolio to a degree. But yeah, I think it's really good to have a variety of ETFs. I don't honestly, as long as you buy and hold, in my opinion, I think that's really all that matters. And as long as you're diversified, that's really the key. Um, but yeah, I'm glad this is helpful because, well, I may have my own theories about how to run my portfolio. I've also I've gained inspiration from a lot of these different portfolio theories, and and to be honest, I guess you could say that I have created my own unique, heavily diversified portfolio with a mixture of ETFs and individual stocks that I've hand chosen myself that I personally like. So it's kind of wild, man. It's wild shit. But let's see. Tim Smith is saying is asking how much how much percentage should we give Kathy Wood? Then there's the 100% ARC portfolio, which we call the 100% dumbass portfolio, which would be you just buy 100% of your portfolio is the ARC ETF, and then you just watch that thing crash and burn. So get the ARC ETF. Not just kidding, but that's funny though, dude. Yeah, Kathy Wood. I mean, like, I think Kathy Wood means well, but at the same time, I do not agree with her being so heavy on risky speculative shit. There's too much speculation in that in the ARC ETF. DH says is asking, how do you get started with a portfolio? Um, well, honestly, first you sign up for a brokerage account. Now, there's many ways to start your portfolio journey. You could get a 401k. You can either get it from your employment or get it from really anywhere. There's 401ks out there all over the place. Me personally, I don't like 401ks. I don't have a 401k. I have a brokerage account. That's me personally. I have like four brokerage accounts if I remember right. One I don't pay attention to that much, and I probably should. But I believe that brokerage accounts are the best thing because there's really no limit to how much you could put into the brokerage account. 401ks through work, they might match actually, so you may want to try to take advantage of that. I'm not against 401ks. I just personally don't have one because I know how to invest on my own, and once you know how to invest on your own, you kind of, I mean, unless you're like I said, if your work offers a 401k and they're willing to match you on the 401k, then take advantage of that. There's no shame in having a 401k because you're pretty much getting exposed to stocks and all that sort of shit anyway. You're doing exactly what I would be doing, except for with a 401k. I think there are some tax advantages, by the way, with 401ks that I'm not quite aware of. So yeah, honestly, if you have a 401k, milk that shit. Put money into it. That's great. Um, let's see here, and then the Story Studio says I'm 25 and I don't know how to drive a car. You should invest in government bonds. Now, it's okay if you don't know how to drive a car, by the way. I didn't get my license till I was like 26 or whatever. So don't even sweat it, brother. I was in the same boat if that makes you feel better. I was petrified of driving. Driving freaked me out, man. I get it. So, Story Studio, I got you, partner. So, DH says, I have a 401k. Should I have a separate brokerage account? Honestly, that's up to you. That's up to you. Me personally, if I had a 401k, I personally would want to still have a brokerage account that I fully controlled. But that's just me. I'm a control freak when it comes to my portfolio. I'm very much a control freak. I prefer to construct it the way that I want to construct it, and I feel like even though a 401k is fine and it would give me diversification that I would need, I need that level of control. And also I don't want any limits to how much money I could put down into it. So me personally, I love brokerage accounts. I don't have a 401k. I'll be fine. That's the great part is you can retire with just a brokerage account and really good skills in investing just long term. There's also IRAs. I don't have an IRA, but there's nothing wrong with those either. I say look into all those options. I'm not a good teacher in 401ks and IRAs because I don't have any real firsthand experience with them. So you really should talk to people or look up videos. Talk to people, look at videos of people who are actually experienced with that shit. 401ks and IRAs, I'm not gonna lie, I'm not very experienced with those. Brokerage accounts though, I'm pretty much an expert in brokerage accounts at this point. So Charles Schwab, Robinhood, you name it. Well, those are my two faves actually. And then TD Ameritrade before they merged into Charles Schwab was another one that I had, and then they merged, so I got two brokerage accounts. Woo. Let's see. Let's see. I have a 401k. I already read that. So yeah, you should. I think you should. That's me personally, but talk to a financial advisor about that. Tim Smith says, I want to see a video called New Places on Your Body to Place a Breathe Right Strip. Let's learn together. Oh, dude. I had to let that sink in because I was a little bit tired, but as I was reading it, it just slowly, I was like, oh, God. Oh, God. I could use Breathe Right strips as nipple pasties. Holy shit. When I'm doing one of my shirtless videos next time I do a shirtless video, I need to get 2 of the Breathe Right strips and just put them like on my nipples and like just say that they're pasties, but they don't really do a good job. They wouldn't cover the whole nipple, but it would be awesome anyway. Holy shit, man, that's awesome. DH is saying, what is the best brokerage account? Honestly, they're all pretty good for the most part. The majority of them are. I was going to say, if you're going to go with most reputable, the one I would say is the most reputable is Charles Schwab. I think Charles Schwab is actually the best brokerage account of them all. But I think, for all the criticism that Robinhood gets, I think Robinhood is completely fine. They were the pioneers of the no commission trading, the no commission fee trading, where you didn't have to pay a commission fee. That's pretty tight, pretty cool. But yeah, no, I love Charles Schwab. Robinhood's good. I think Weeble's pretty decent. Public's not bad. But yeah, no, Charles Schwab is definitely like the creme de la creme in my opinion. Now, there's probably other brokerage services out there that I probably have no clue about. I miss having a TD Ameritrade account though. That was pretty cool. No, not TD. Was it TD Ameritrade? Yes, it was TD Ameritrade. It's been a while since they merged into TD Ameritrade. It merged into Schwab. So it's funny. That account ended up merging into my existing Schwab one. So I got two brokerage accounts within Schwab at this point. It's pretty funny. I could always just merge them together. I don't know. Maybe I will. Real Marcel YT says, guys, I work hard. Hell yeah, Marcel. I'm glad you do, brother. Hell yeah. But yeah, I mean, more money. I'm gonna say this though: the more money I make, a lot of it goes towards straight up. A lot of it goes towards my investing. I think there's hard work, there's smart work. You gotta work hard, but work smart, man. You gotta work towards a goal. Um, I try to wake up with a goal in mind in the morning, so I need to start writing it down more. Writing my goals down a little bit more like I used to, and yeah, a person with a goal, man, is pretty tough to conquer. So pretty unshakable, man. Anyway, I'm a little tired, you guys, but hey, I gotta thank you guys again. Really mean it. Every time I get you guys on here, man, whether it's Tim Smith, whether it's like my boy Mark Velez hasn't been on tonight. He's probably sleeping. He's probably busy. I was surprised that Mark wasn't on. Usually Mark's like on every episode. So Mark, hopefully you're doing good. But honestly, I sometimes he's probably sleeping, man. You gotta sleep. I gotta sleep. I need to start sleeping. Jesus. Um, I'm probably gonna go straight to bed after this video. That's how tired I am. I'm usually not this tired, but I'm gonna drink some water, lay down, read a book, and just get my relaxation on. But well, I don't think I got anything else I want to say to you guys except for just thanks for always being so damn supportive. Before I go, though, I'll just read this last comment real quick. So DH says, "Can the broker you choose impact how much you make or lose?" The only time they can really impact it negatively is if they had commission fees. But most brokerage accounts don't have commission fees anymore. But uh, if you go with a brokerage account and they have commission fees, I would say don't even, unless they're like some weird high, unless they have something that they offer that's worth the commission fees, which usually in today's age there's really nothing that they could offer you that would be worth the commission fees. So um, yeah, honestly, just you know, I'll give you an example. You could use Robinhood or Charles Schwab, right? You can get you. Let's say I had a $1,000 portfolio in Robinhood and a $1,000 portfolio in Charles Schwab. Let's say I bought the exact same stocks on each of these brokerage accounts, right? It wouldn't matter. It wouldn't matter which brokerage I used because I still own the assets. The assets are in my portfolio. They're in my brokerage account, so they're mine. Like brokerage accounts cannot loan out stocks unless you explicitly tell them to. So they're protected in both areas, which is awesome. Not all brokerage services are created equal. I just want to say that. So you want to go. I still think it's good to go with reputable ones. Robinhood, I believe, is reputable enough. I think Charles Schwab is reputable enough. Um, those are my two favorites. I'm not gonna lie. And the third was TD Ameritrade, but then they merged into Charles Schwab, so it's like, oh, okay. Charles Schwab really is the dynamo, the greatest of all time when it comes to brokerages, in my opinion. So I'm a Charles Schwab kind of guy. Um, but there's other things out there, by the way. You don't have to go with brokerages. You can get IRAs. You can get hell. You could even sign up for Vanguard's funds without having a brokerage account. So truth is, you don't need a brokerage account, but I think it's good to have one. Is all I'm saying. I think it's fantastic to have a brokerage account because you have more control. It's not. I don't think it's as good on taxes though, as far as I know. So your tax situation may not be as great about it, but you're still gonna, you know, still gonna do a good job one way or another. Here's another thing: talk to a financial advisor. See if a brokerage account's right for you. See if a 401k is right for you. See if an IRA is. You got to talk to these financial advisors. Well, I may put the douche. Look, I put the douche in fiduciary. All right, but I'm not technically a real financial advisor, so I can't say that I'm giving any advice. It's all just for basic educational purposes and all personal opinion, by the way. And so, yeah, you talk to a financial advisor, one way or another. I know it's a bit of a cop out. I'm sorry, but yeah. Anyway, all right, you guys. I'm tired. I'm tired. Hold on. Okay, I'll try to read all these comments here. DH says, but won't index funds provide for greater returns over an IRA? Well, an IRA can allow you to have index ETFs in the IRA. So, like, you can have a 401k and an IRA, and both of the 401k and the IRA, they can both contain exchange traded funds that are basically indexes. So, I mean, like I said, the only reason I have a brokerage account to begin with and not a 401k or an IRA is, well, one, I don't really trust the place that I work at, so I really don't care to have a 401k with them. Two, a brokerage account is always mine. I mean, the 401k is always yours no matter what, even if you leave the employment that you're at. I just don't feel like dealing with my employer that much. I only want them to pay me, and I sell my skills basically to them. I don't really work for my employer. I basically sell my skills to them, and they pay me. That's about it. That's about the end of that relationship. Is how it goes. I will say this about my job. I do sell my skills, so I don't really work for them. So it's not really a job. It's a contract. You know, I sell my skills to them. They give me a pretty good amount of money. Luckily, I've got a lot of experience doing customer support, so it's really been pretty interesting, to be honest. But yeah, it's sad. I liked my job, and I've slowly begun to hate it. It's tough to admit that. I'm sorry, I'm dumping on you guys at the moment, but just real quick, it's frustrating to suddenly hate the one thing that you're good at. I'm good at a lot of things, but here's the thing: hate is a little exaggerated. I do have this one supervisor who gives me a lot of flack, and has not made my life. She's we have these things called one-on-ones, I guess you could say, where they kind of evaluate you and stuff like that. And I feel like she tries to look for things that I do wrong and tries to make a big deal out of them. That's all I'm gonna say. I don't like it. I don't like it one bit. But yeah. So Tim Smith says I have 12% in NFT gifts of Destiny blowing tits. Dude, Tim Smith, you are comedic gold tonight, my man. Holy fucking shit. Fucking gold. This is so good. Destiny. Oh boy. He is the wokest YouTuber of all time, Destiny. I thought I was the wokest YouTuber, but I guess Destiny is. So DH is asking, are you in finance? No. I work customer support. I do basically, I'll just say that I do technical support, troubleshooting over the phone. Luckily, I have a lot of experience doing that. I'm really good at it, thank goodness. But I've worked for the same company for a while too, which is pretty wild. I'm getting paid pretty well at the moment, so I have no real reason to leave, and I do really good at the job that I do. I try not to get too complacent though. But during the holidays, it's definitely a tiring time. I'll tell you that. Tim Smith is saying we need a Destiny Copper Cab Holiday Joyster. Oh my god, dude! You know, it'd be even better if my boy Destiny blows my boy Copper Cab. All right. That's what I want to see. That's what the world. Maybe that's what the world doesn't want to see. That's what I want to see, though. I would love to see because first off, I love Copper Cab, but I think it would be hilarious to see Destiny blow Copper Cab. I'm just saying, just saying. So YouTube, find a way to make that happen. I don't care if anybody has to AI generate that shit. Make it happen. All right. Oh man, but no. DH, to your point, no, I'm not in finance though. Just you. I personally, I've read a lot of financial books. I've watched a lot of videos from like Warren Buffett, Charlie Munger, Ray Dalio, you name it, the works, man. Um, Robert Kiyosaki's iffy. You know, I've had a lot of. I was gonna say I've had a lot of mentors that I've never met personally, but I've watched a lot of their videos, read a lot of their books, and I've been able to learn a lot from them. So you can take away a lot of stuff from people out there, for sure. But anyway, all right, you guys, I really should call it quits tonight. I'm tired. I'll get y'all later. Woo! Bye, guys.